Welcome to another week in review. We're going to be looking at the trading week of May 12th, 2025. Get data out of the way. There isn't too much this week, which is nice. It is OPEX week, so something to consider. Going into the end of this week, we do have option expiry. Monday morning, May 12th, we have 10 a.m. Kugler speaks. Again, not much really on Monday to pay attention to. Tuesday, we have CPI, so obviously that'll be the big decider on Tuesday. CPI 8:30 in the morning. After that, not much to really pay attention to on Tuesday. Wednesday, we have Jefferson speaking at 9:10 a.m. And again, really not much to follow up there on Wednesday. Thursday, we have PPI, retail sales and jobless claims. A little odd that there's a day separation between CPI and PPI, but in any case, 8:30 a.m. PPI, retail sales, jobless claims, and then Powell is speaking at 8:40 a.m. So Thursday morning pre-market obviously will be pretty impactful on that day. 2 p.m. bars speaking on Thursday, but really it's going to be it's going to be Powell probably that morning. That's really going to be the mover. Friday, we have housing starts at 8:30 a.m., and then we have the University of Michigan consumer sentiment and one-year inflation expectations at 10 a.m., so something to keep in mind as well. As far as earnings go, we don't have much really that's impactful to the market this week. So the only thing I really have noted here on my notes would be Cisco, Wednesday after close. Again, it's not going to be market impactful, but it'll be interesting to watch. And then Thursday pre-market, we have Baba, which is always interesting. We have Walmart. So Walmart's interesting to see how their guide's going to be, especially considering all the recessionary talks. If you're a macro boy or you care about forward guidance, etc. Consumer discretionary and places like Walmart, it's always interesting to see like how they're going to see the coming months, how their sales are going to be impacted, etc. So something to pay attention to. Again, not really impactful to the market on a short-term basis, but something to pay attention to just for the sake of interest. Getting into the S&P 500 futures, ES, a very choppy week last week. So the week before, and I feel like every other week, the last little while, last month and a bit maybe, we've been talking about this 57.20 level, which is incredibly impactful to the short-term and medium-term direction of the market. We did have a nice test on Friday, and then obviously we sold back down, back into prior weekly value, the week's prior value. And then we basically we didn't do much. Last week didn't actually tell us a ton, other than the fact that the market wasn't ready to really break away in either direction from 57.20, and it's probably waiting on a headline really to move this market. So what we've done now is established a balance range. So I won't talk too much about what happened intraday here because it doesn't really matter for the sake of this week. We're sitting in 7-day balance. So we have the highs at 57.40. We had this really nice attempt to try and break away from 57.20 on Thursday, and ultimately it was met with a late day liquidation back into weekly value into close. And then Friday we printed an inside day. So we're sitting in 7-day balance with the highs at 57.40 and the lows at 55.96. Last week I was talking about, a break of this range would dictate the direction of the market for the next little while. That's still going to be the case. And as far as the range to look at here, it's going to be how we ultimately break away from this now established short-term balance range with 57.40s at the highs and the 96s at the lows. So what I'm going to be looking for really early on in the week, Monday and Tuesday, but primarily Monday, is how we trade around Friday's inside day. So the fact that we printed an inside day Friday is actually kind of nice because it's going to give us a reference point for potentially what extreme of this balance range we test. So inside day rules is basically play the break in continuation of the range of the inside day. So the RTH high on Friday was 57.10s, and then the low down here was 56.62s, which was also last week's open and last week's VWAP. So what I'll be looking for Early strength, I would say, would be bids above this 55.90, or pardon me, 56.90 area. This was important all week. This was capping us intraday all week. If we start to see buyers really take us above this 56.90 spike, which is also Friday's value area high, then I think the chances of testing 57.10s up into 57.15s are very high, and we should stay on the long side, or at least I'll stay on the long side, looking for this test up here. If we can break away from Friday's inside day high, so if we break away from 57.10s, again, I'll stay on the long side. I'm going to look to see if we can test back up into the extreme of this balance range at 57.40s up here. Weakness, I assume, is going to come in if we start offering below basically 56.60 to 56.55. Really, I think it's going to be down into Thursday's low down here. So we have the M period spike base from Thursday that started this move higher. We had no acceptance below that. We had no acceptance below on Thursday, of Wednesday's M period spike base. So strength was assumed in the short term. If we held this was the daily low to the tick basically, and we went straight up to test the extremes of the larger range that we're in. Weakness, in my opinion, would be assumed if we start offering 56.55s. So if we see, a headline come out or whatever it is, for whatever reason it is, if it's data driven, if it's just purely, market generated driven, if we start offering 55s, then I'll stay on the short side and I'll look for the extremes down of last week's range. So looking down for 36s as a target, down into 20s, and potentially down into the bottom of last week's balance, which is down into 55.96s. So basically just going to play the break of Friday's range. But I think you have a very early indication if there's some strength in this market if we start bidding above 56.90s right here. So that afternoon pullback spike up, but it's also an important pivot on the order flow side as well, right here. So I'm going to keep that pretty simple. The market's waiting really for some reason to break away from this. So where we could also see trades form this week or potentially next is around the extremes of this balance, right? So Friday is going to give us a really nice indication, in my opinion, of what extreme we might potentially test first. And then once we're at these extremes, this is where we need to really pay attention. So if we start seeing acceptance above 57.40s, then my inclination is to stand the long side to test up into the Liberation Day spike high, which is 57.70s, as well as the 200-day moving average and the upper end of this week's expected range, which is up into 57.90s. I think ultimately, if we do see acceptance outside 57.40s, and if we have any attempts to sell this back down and we're still holding basically this upper distribution that we put in on Thursday and we can't sell back below 57.20s, it's only up for me. And I'll only be looking on the long side to try and target up into 5800s, into the January lows and the 100-day moving average, and potentially higher. If we end up actually accepting back inside 57.20s, then I think an accelerated move higher is entirely possible. The other side of this is if we're failing this, so if we put in a lot of effort, we put in a lot of volume, potentially even getting up into Liberation Day highs. If we put in a lot of effort here and we fail and we see a huge amount of sellers come in and start liquidating, that would actually be more bearish, in my opinion, than just failing these balance lows. If we can't accept this range higher, if we see a lot of effort to get further up and we see no result and we see a liquidation brings us back down, then traversing this entire range all the way back down would be likely, in my opinion. And I think we'd actually break. I don't think balance lows at that point would bid. I think we'd break lower and we'd probably come back all the way into the 20-day moving average down here, down into 55.11s, which is also March lows. We'd take out this naked weekly POC. We take out this daily naked POC and likely probably test the bottom of this range back down all the way into 5400s. That would be my guess. That's on a higher time frame perspective, but I think really if you see us drive up and fail this and come back below 57.20s, then a larger, higher time frame liquidation is more likely. So I think it's entirely possible, whether if we do that or if we break to the downside, we break the 7-day balance to the downside, I think it's entirely possible the market tries to find a base somewhere down into 5400, potentially backfill this gap even down into 5380 to 5340. It's entirely possible we find a higher time frame, higher low somewhere in this range. So I'm putting the cart before the horse there. There's a lot that has to happen for us to get back down there. But just from, a bigger picture perspective, I think, we should be conscious of the fact that the lows could potentially be in for a while, especially with the reaction off 4800s that we had. And anything really that we see nuke us down into this range could potentially turn into a higher low on, the daily, the weekly charts and, take us back up. So things to consider. NASDAQ is exactly the same thing. I'm not going to spend a ton of time on this because my plan is the exact same. So going to be watching the inside day high low. And again, strength short term will be assumed if we see acceptance above 20,180s, above this afternoon spike up and above Friday's value area high to test the highs of this range. If we're seeing acceptance again above here, above 20,300s and at the top of this balance range, then again, it's only up for me. And I'm going to be looking for 20,600s to 20,700s in the short term. Same idea. If we put in a lot of effort and we fail, then it's going to be the traverse back down. Weakness for me would be assumed under 20,040s. So under the Liberation Day spike high, as well as the inside day low, which is 20,058s. And I'd be targeting a move down into 19,900s, last week's POC, and probably more likely down into this naked POC, down into 850s and the bottom of last week's range. So going to keep that really high level, really simple. I don't think there's too much more to add here. I think this week is going to be a really good week to test patience. Last week certainly was, but the best trades really are going to form around these extremes, right? They're going to form around Friday's high-low, and they're going to form around 740s and 596s on ES. So if you got chopped up last week, or if you have, difficulty in navigating, days like this intraday, which can be very hard, it's very challenging. It tested my patience a lot last week. If you're having trouble in ranges like this, you don't need to trade it. You don't need to be in a trade every single day to try and, basically get us out of this range. Your 5 lots on MES aren't going to move the market to take us away from this. So if you're sitting in if you're sitting in a range like this, it's a lot of the time it's just simplest to wait and see how extremes like this get tested, and then play around these levels here rather than trying to join in a range that looks like this. You can wait for those daily high lows. You can wait for those balance extremes. You don't need to be in a position all the time. You don't need to be in the market all the time. Last week, kind of reminded me of that. I did okay, but as far as like how my style of trading works, like I can't hold a runner. I couldn't hold a runner in this to save my life because, it would get clapped back, and, a scalper would have done much better in a range like this than somebody like me who's playing the edges of range and looking for those larger moves that, I just didn't get any of those last week in the short term because everything basically, got round tripped. So that's where I struggled a little bit last week. And I think, I have to remind myself sometimes of, I don't always have to be in the market, or if I'm going to be in conditions that I know could be like this, I should be probably exiting full positions or majority positions rather than trying to let them run, which is what I normally do. So just a little note on that. Again, not too much data next week. I think be cautious of headlines with China trade talks. That's happening this weekend. At the moment, it's it's Saturday at 10 a.m. at about 10:30 Eastern time. So at the moment, there's no real headlines out about any progress with trade talks. I would say don't put too much emphasis on what they say about trade talks. I think that's also where a lot of people are getting really tripped up in this market, is that they're focusing too much on what's happening in the news cycle for trades that you're going to be holding for 5 minutes to 4 hours to a day. It doesn't really matter, right? So headlines are going to move this market, but really focus on where price is trading and where it can go, and block out the noise. Don't make a decision on a short-term trade based on the larger conditions of macro that are happening in the market. If price trades through a certain level, then where is it more likely to go? If it fails at a certain level, where is it more likely to go? In the short term, keep it simple. That's what I'm going to try and do. So hopefully that helps. If this does help, please like the video. Please subscribe if you haven't already. We're at 100 subs, which is actually kind of cool. I never really thought when I started this I'd even get there. So if this helps at all, please like the video. Please subscribe. That would mean a lot to me. Thanks very much. Good luck next week.